And welcome back to the Wizards of Dalal Street, a fresh breeze. We're talking to two bona fide wizards, Taher of Invesco and Manish Bhandari of Vallum. Taher, let me turn to you and to domestic concerns, which obviously are on the forefront of all Indian investors. Elections, elections, elections. We have a galore of them, a plethora of them coming up in the next few weeks. Our national elections scheduled in 2019. Do you keep cash anticipating volatility, or you say, I remain invested?
Well, most of our strategies are always invested at all points in time. In fact, we follow an internal process whereby we never hold more than 5% cash in any of our funds under any circumstances. So be it, hell or high water, we are always invested. Except for one strategy, which is supposed to be an asset allocation strategy, where probably we take a cash call. But otherwise, we are fully invested at all times. And then there are, so we, again, my learning, and I originate from a house which is obsessed with process, and I'm at a house again which is also obsessed with process. So we have been a very process-oriented house, and that's the beauty of having a process, because it takes out all the sentimentalities, it takes out all the other associated individualistic stuff, which you might probably bring into play. So here it is about, we follow these set processes. We know that these are the things under which we operate. We don't really bother about external events where we have no control over, and we live through it one way or the other, whether it's good or bad. Ultimately, our investments are not meant to be for the next year or probably the next 6 months. If
can you summarize your investing process at Invesco? I mean, the previous avatar we knew, QG, LP is well known now. What is your investment process here?
So it's a bit detailed. I'll be a little constrained to explain everything here in the show, but we follow, what we do essentially is that we categorize stocks. We bucket stocks into two main categories, which is growth and value. So essentially we are talking about as we know, there are two main styles of investment, growth and value.
But isn't growth just a part of value?
At one level, yes. So we are talking about everything at one level is value, because it is in relation to something in the future. Either future of the growth of that company, or future of being able to actually recognize the value which the market has probably not realized at this stage. So yes, at some level it is value, but we are still talking about growth entities differently compared to what we would talk about as value entities. And it gives us a decent way to attach a valid investment reason to every idea that we bring into our portfolio. And we keep following that investment rationale all the time, that is the company delivering on that investment rationale that we started off believing they would. And if there's any departure from that, then we consider it to be something that we need to think about, or probably sell out or whatever. So it's a framework which allows us that investment discipline to make sure that ideas always have an investment reason. They are not random in nature. We know exactly what we have bought for, whether it is growth or value. And within growth and value as well, there could be differentials depending upon which stage of the life cycle the business happens to be in. So I think it's a nice compact way of doing things. It has been run at Invesco for a very long period of time, right since inception. And we got some outstanding results and outcomes out of that. So we would like to believe that it's a well-oiled machine, and you get some reasonably predictable results. Ramesh, we are in a business which is most unpredictable. I think we've all chosen this profession for ourselves, but we all know that when we come at 9 o'clock in the morning, we don't know what the hell is going to happen. Okay, nobody has a clue. And it therefore makes sense to actually build some method into this madness. And that is where the process helps us bring in some kind of sanity.
And that allows you to hold your own in October.
Hold your own, and exactly. So if let's say the election doesn't go the way one desires, or maybe the way the market desires, then at least we know that what we bought it for is probably the potential for it to gain market share, or probably for that company to turn around over a period of time, which at some level might be independent of politics. It might be independent of who at the country level probably is in charge. Many things are, the country has its own destiny beyond a particular point, and we are, a country of 125.
Demographics is destiny in our case.
Exactly. So I think that we have to ride, and as an investor, we need to at least have that confidence about ourselves and as a country about our future. Otherwise, if you hold a very, very pessimistic view, then
you can't win the stock market. Manish, but you're more sanguine about the prospects sometime. I think you feel that we're not necessarily headed in the right direction in this country, that there's a lot of challenges that we don't meet. Expound on that thought process of yours.
This all happened to me since I started blending the top-down approach of investing through the bottom-up process, and I started reading a lot more macros in terms of what is happening in China and how we would stack against China, and how if you have to define this whole universe into the global system, and then how would we would relatively stack up. And there my disconnect happens that from a corporate India perspective, from the government perspective, we have not done enough what would have made this far more sound economy versus what others have done. So when you have some relative yard comparison. And when I went to my first China visit way back in 2008, I distinctly remember I didn't sleep well for 3-4 days because what I saw was outstanding, something just outstanding. And I make sure that I tell everyone that just do make a one visit to China, it'll change your perspective of life. So in a globalized pool, what China does impacts us, what US does impacts us. In that context, I think India has a lot more to do to produce. And I give you an example. We have witnessed, all of three of us have witnessed one of the biggest history in India of making of mobile phones. And I go back and say that why do I hold a 40,000 rupee piece of mobile which has been imported and which has been dollar denominated, why it has not been manufactured in India? And this would have been done way back in 2003-04, and by now today we would have been, and it's a light engineering job, so we would have been a billion pieces export market of the world. So what we are doing now would pay dividends over a period of time, and it's a very long journey. So
but to be fair, we've done that in India. I mean, for example, India has an automobile industry,
yes,
which the rest of the world, like say Pakistan, Middle East, doesn't have.
Yes.
India has a pharmaceutical industry,
yes,
that is pretty much the envy of global peers,
yes,
which the rest of our compatriots in emerging markets don't have.
Yes.
So in the times of, say, the socialist Raj or Mrs. Gandhi's regime as Prime Minister, we have actually fostered domestic innovation by shutting off the MNCs. So do you advocate kicking the Cokes and the Colgates out of the world again?
No, I never made that case. India has welcomed foreign direct investments, and it has been a need of ours. What we have not done is government as an enabler to set up long-lasting impact on the manufacturing, which is a base for many of the countries for years and years together. Lot more sticky jobs, lot more employment generation opportunity which has happened. So in that context, I think we have fallen a bit. Yes, India is a success story in the automobile industry, in the ecosystem of auto ancillary, but bits and pieces it has happened. And a lot of companies have taken the initiatives. And
would you think, for example, China banned Google, banned Hotmail, Google Maps, and their own companies like Alibaba, Tencent grew to be extremely huge and profitable?
Yes.
Would you prefer a similar strategy? Would you have buddied entrepreneurs to come up with a search engine or come up with a social website?
Depends upon which side of the table you are sitting. If you're sitting in China, answer is yes, that's the best thing what they would have done for their economy. And if you're sitting as an outsider, you would have argued from a different position. So which position and where you're
from
sitting.
From an Indian, what is the best for the Indian economy? What would you have argued?
I'll tell you my dilemma. So we have invested in one of the finest middle market companies which is into oncology drug. And I did ask the entrepreneur that you are such a fine business and with low cost production with all API integration. So why don't you go and make your inroads into China? They need drugs, and there is a shortage of drugs in China, and especially from cancer drugs. And he asked me that, yeah, I did receive an inquiry, and they did ask me some 300 pages of document. It looks like that they wanted my whole plant design itself. That is how the China works.
Theft.
Yeah, theft, or maybe they have very niche.
We call it theft, they call it
yeah, exactly, very sophisticated. But yes, so now today with India, look at the market share of India. We have too dependent on the US and in Europe. We are not able to make big inroads into the China. So there where my disconnect would like that. How would you do this as an Indian entrepreneur if you have a global competitive business and you have one big isolation of the market, which is a very prospering country, and you're not able to sell them? Something would have done far more deeper to engage and see how our business could prosper.
Well, Taher said he always remains fully invested. That's
Yes.
their process.
Yes.
Is that your process also?
No, I don't remain fully invested. I always keep some portion of cash, and that depends upon the market cycle.
And if you're very bearish on the market, you'd raise the cash level?
I would raise the cash, and the very reason being that in our business, 50% is driven by what I do, and 50% in our business is driven by what someone else do. So you have sometimes a wonderful dislocation opportunities which has been presented to you because someone else want to do a liquidation because of some reason. And at that point of time, definitely.
You like the comfort of cold, hard cash to step in and buy?
Yes, definitely.
So give us an example of first, in 2018, what led the market higher, what stocks did well. Will they continue to be the case in 2019?
A portion of them, yes. A few of them, yes. But if you ask me, I did mention to you about the NBFC sector. So there was an overpay for the growth, and so there's a valuation has become a crisis. I won't say a business is a crisis, maybe for a few of them, but not for all of them. And valuation would be a crisis for many of them. So if you segregate the nuances, the valuation is a crisis for many of them. So many of them.
So you pick and search among the NBFCs?
Yeah, we did one investment in a gold NBFC, and that's.
In a gold NBFC?
Yeah, which
okay.
lends it to a gold.
Right.
So we did, and that was our first NBFC investment after a long time.
What are you excited about for 2019? Which part of your portfolio, which sector, which theme doesn't allow you to sleep at night?
Sleep on the right side, from a positive side.
No, yeah, because you're excited about it.
Yes,
You wake up.
Yes, yeah, sure. So I see a bag full of opportunities for next half a decade or so in the chemical space, and where the deflation which was exported by China is moving into an inflation, and the whole and India has a requisite DNA to make a large-scale impact on the global chemical supply and chain, and we have a rightful entrepreneurs, right mix of entrepreneurs and right mix of businesses to sell to the global markets. And there where I see a wonderful volume opportunity for India to gain market share on the chemical side.
In the specialized chemical sector?
Yes. And then when one segment does well, the whole ecosystem starts doing well.
Right.
Yeah, and I don't see any threat on the technological disruption on the chemical side in intermediate future. I don't see that. There will be innovation, and Indian entrepreneurs have seen a success.
Enough pool of scientists and chemical engineers to help take us forward.
It marries well with the competence what India has, and we have seen a success in the pharmaceutical sector. So a chemical sector with some natural color.
It's a light sector.
Yes,
yeah.
That's right. So I see a wonderful opportunity here.
Taher, what keeps you up at night? Which sectors keep you up at night?
So like as I said, actually India, as you know, has been, and you mentioned this, that it's a significantly consumption-driven play, and that's what worries me as such, because this is the only pivot of India as of now. We've yet to find a place in the sun between the countries like the US and China, which have found their fortes. So China and now is already embarking on technology. We've yet to figure out whether we want to, strengthen our manufacturing, and whether we want to stand out on that, or we want to develop some different kind of capability as a country. So I think consumption and consumerism related,
125 crore people can't go wrong.
Can't go wrong. So I just hope that the enablers to consumption are not disrupted. We saw a little bit of that come about in the last couple of months as a fear. And so we want to make sure that doesn't just go out of hand. And if that remains reasonably okay, I think that should kind of comfort us. But otherwise, that
consumption. So broad consumption.
And, there, the challenge is also on valuations, because that is a place where there is a certain amount of excess in valuation as well. There's ownership too.
Right.
So we can't allow that to kind of crumble. So we need to keep going as a country with. So that's, I think, beyond that, most of the things are reasonable. They're turning reasonable, especially after this correction. I wouldn't say that they're cheap, but they are kind of getting to a fairly reasonable level. So you can live with those, but consumption is an area which probably, from the overall macro.
My last question to you, Taher. What has been your great learning in 2018? It's been a tumultuous year, lots of highs, lots of lows. What has been your greatest learning?
Don't take sides, and keep a very balanced approach. It probably doesn't pay to think very dramatically in terms of in one direction. And because things can go wrong, and there was, especially in 2018, we were confronted with we could see that there were a good number of events which could kind of induce volatility in the markets and in the system as a whole. So it therefore that was the key learning, that keep a balanced approach. You're not likely to get significantly affected if you were to probably stay somewhere in between.
Stay balanced is what you learned. How about you, Manish? What is your significant learning of 2018?
Illiquidity. Market can punish illiquidity and all set of companies with the same stride at a certain period of time. I think that is one of the biggest learning I've seen. So with illiquidity in mind, market doesn't distinguish between a good company and a bad company. It could be illiquid company and a liquid company.
So hence the comfort of cash.
Comfort of cash, and also maybe the holder need to know that what he's holding in, it's an illiquid asset, so you have to match up with the right backing of the investors.
Guys, it's said that knowledge is the treasure of the wise men. Thank you so much for sharing your riches with us.
Our pleasure.
Thank you for joining us on a very special edition of the Wizards of Dalal Street, a fresh breeze.